Some lovely trades were available today using timeless technical analysis strategies such as pullback entries and trendline breaks. Let's not waste any time and get straight into the money. I'll go over in this video the current overall market context, the best trades to have taken, and my updated list of my trading principles. Hit that like and sub, and let's get some Benjis. So taking a look at the overall market context, if we take a look at the SPY, that's the S&P 500 index, or the ETF, sorry. Whether you want to look at the SPY or ES, same thing really, doesn't really matter. Yesterday, you can see that, after a sell-off the previous day, what happened yesterday was after a news event, it kind of spiked up above 519 level and kind of held that until later in the day where it fell. So keeping that in mind, in the pre-market, it's kind of just been trending back up. And so you want to just keep that in mind and see that overall the market is kind of trading within the range of 519 to 524 in terms of the key levels. So understand the macro and the micro, understand the key levels. And yeah, the SPY is the overall market, the S&P 500. You can also take a look at the Qs, which is the NASDAQ or the QQQ ETF that comprises of the most heavily influencing tech stocks. And you can see that, it's been trading within a range before, kind of selling off 2 days ago. And then once again, the news event yesterday kind of spiked it back up. And then the pre-market is trending back up. So you want to keep that in mind. It's trading between 443 and 448. And so that's what the overall market context is. As for the market, if you want to take a look at the daily and the macro, we're trending upward. But, the past few days or so, we've been in this range. Every day, I aim to take one great trade in a particular stock, preferably in the first 2 hours of the market open. As you notice from the title of the video, we're looking for pullback entries and trendline breaks, as that has a pretty high winning percentage. And so in any ticker you like to see, I'd say it happens several times throughout the market, throughout in which the market is open. And you just want to make sure in real time that you're able to spot it out and take the correct trade so that you can make some money. So let's first take a look at the stock Nvidia. So before I start, you need to keep in mind that while you're looking at a particular stock like Nvidia or Tesla or AMD, you want to also be monitoring the market and looking at what it's doing at the same time, right? So taking a look at Nvidia, you want to give it a few minutes, from the market open to kind of just assess and see what the market is going to do. So when Nvidia sells off in the first few minutes, away from this EMA, along with the market, which is also kind of trending back down. And then after it sold off, in the first 15 minutes or so, Nvidia kind of pulls back, right? It's a low volume pullback, and this thing could either, bounce back up to an uptrend, or it can just be a pullback, bear flag into a lower move down, right? And so what you want to do right here is see, with this pullback, draw your trend lines and look at the market at the same time and see when it breaks this trend line, you should be anticipating a bear flag, because if it's just going to grind back up higher like this, what you want to look for is a bear flag or a pullback entry with that. So looking at the overall structure of this pullback, you're looking for a trend line break. And when it does so right here, you want to get in with the tight stop, above that candle. And if the stock decides to move above that, you get out. But as you can see in this case, if you enter right here, right around $896, $895. With the first move down, you can take some partials, secure your profit, anywhere from 50 to 75%, just to lock in some gains. And then you can see it kind of chops around that level, but you're still in profits, no reason to get out. And then it makes an extra move downward, in which you can take the rest of your position out or leave, 1 or 2 runners. And so at this point, you've locked in majority of your profits, you've made money. Now whether you choose to leave a runner or not is up to you. But you can see spikes all the way back up with a huge momentum candle back to the upside against your favor. But it's still not enough to get out. And then once it makes that second move up towards your entry price, you want to get out for break even, and not risk anything else, not risk losing any more profits. And so, getting out at a break even price with your runner, you've made this a riskless trade ever since the move went in your favor. And that was the first good trade to take. That happened around 8 a.m. PST. So about 1 hour, 30 minutes into the market open was when that trade was available as a good high probability trade. Now let's take a look at the stock Tesla and see what kind of trade we could have taken here. So in the market open, it sells off just like Nvidia, but then slowly, starts to chop back, to the upside. After chopping back up, you don't really know what it's gonna do. Is it just gonna chop within the range the whole day? Is it just gonna reverse back down? You never know. You can never predict with certainty what the market is gonna do. But a couple minutes in, you can see you can draw this trend line right here, or you can draw this one, and see that overall it's made a higher high and then made another higher high. And so overall it's signaling a bullish upward pressure that, may indicate that it might trend back up. So after this market bounce in which it gives us about 2-3 touch points, double bottom, you can get in right here for a tight stop under that candle, and on the first move up, take some partials, and then on this second move up, take another, partial, and then up to that point you can choose whether or not you want to leave a runner. You can see that the stock went massively upward, in direction of the trend. And I mean, this just doesn't happen all the time. So you have to make sure, you don't get greedy and you hold for too long. And, if you caught the meat of the move and you made your money, it's important not to be too greedy and say, oh, what if I got out here or here? But let's say you weren't comfortable taking this trend line break over here or over here. You can see that it's made another, following this trend upward, you can see that it's kind of made another pullback in which you could have gotten in this pullback entry right here along the 90 MA, set a really tight stop loss right below that candle or the previous candle, and kind of just ride it up. You could have left your runner to ride up until you've seen, the first significant sign of weakness, whether it was up here at 175 or up here at 176. There's different ways you could have played this trending stock, but it's important not to get, all, mixed up and in the drawdown in this first few minutes of the drawdown or in the first few minutes of the market open, which is why I always say to wait, you know, a couple minutes, at least 15 to 30 minutes after the market opens just to assess it, right? You can see that, if you just waited a little bit, you can see that you could have gone in a nice profit taking trending scheme that Tesla has provided you. And so that was another great trade to take. You could have gone in either at 170 or at 171. You can see that the stock pushed all the way up to, 175, 176s. You can see that, just with one good trade and one good stock, you could, consistently on a day-to-day and month-to-month basis make money just with a laptop, some Wi-Fi, and these charts, right? And mind you, again, you want to keep the SPY, the ES, whatever you want to use open at the same time and kind of monitor that. So you can look at the ES and see, it's been kind of trending downward overall, but with Tesla, it's just been, pushing upward, indicating signs of relative strength. So the stock is relatively strong against the market. So that's another good indication that may give you more confidence in taking your trade. Let's take a look at the stock and SMCI, another company known for semiconductors, in the same niche as Nvidia, right? So you can see in the first few minutes, spikes up, spikes back down, and kind of chops along this VWAP and EMA for quite some time, an hour or two. And so the more it chops and the more it kind of gives you consolidation with a trend, you draw that trend and it, the more touch points it has, the stronger the trend line becomes. So once it breaks, it's a good indication that you can get in for a trade and make some money out of it. So once it breaks that trend line right around 7:45 a.m., you get in right when it breaks it and kind of pulls back to the trend line, which is okay. No need to get out of you know, your trade. Your stop should be, anywhere right above that candle in which you entered or the previous candle before that. And then when it makes its first move down, you take, majority of your position off and then leave a runner, right? And so you can see that after you take the majority of your position off, you've made some money. There's no reason as to why you should, you know, be in the red at this point. So as the stock is moving back up, it's pulling back again to that EMA, back to your entry price. You want to get out, before it hits your break even so that you don't lose any money. And so, you can see with the stock that it pulled back quite a bit more than what you want, all the way to the VWAP and then trended back down. But once again, if it hits your stop or if it hits your trailing stop loss, once it makes that move down, you want to set a trailing stop loss in which, you move your initial stop to a lower stop so that you secure profits. So once it pulls back a little more further than you wanted to, you just get out, you've made your money, and you look for the next break. You look for the next good trade. You can see that it makes another trend line and a pullback to the VWAP. And so you can get in right here and you can see that it kind of just trends down all the way down to the 990s. And so that was another great potential trade you could have taken with SMCI. No trading in the market open. Wait at least 15 minutes until 6:45 a.m. I'm in California, so the market opens at 6:30 a.m. If you're in the East Coast, then don't trade until 9:45 a.m. Keep losses minimal. Set your stop loss when entering a trade and exit when it's hit, without any hesitation. You must know your risk every time you enter a trade, and that's a non-negotiable. Look for clean, strong trend lines with multiple touch points, bull flags, and pullback entries and trends. Avoid choppiness. What creates a strong trend line are multiple touch points, especially on a higher time frame. So 1 hour time frame trend line would be stronger than a 5-minute trend line, and a 5-minute trend line will be stronger than a 2-minute trend line. So keep that in mind. Take note of the macro and micro trends, and if it's choppy or in a range with a lot of inside bars and the stock seems to just be slow and not moving much, avoid all that and save yourself the headache. Once again, map out important key levels and note the macro and micro trends. After entering your trade, secure your profit after the first leg or the first move in your favor. That should be anywhere from 50 to 75% of your position size. Leave runners anywhere from 25 to 50% of your size. And once the move goes in your favor, set a trailing stop loss so that trade essentially becomes risk-free and you're in the money the whole time while you can ride out the trend. That wraps up today's video. Thanks for watching. Hopefully you can see how pullback entries, bull and bear flags, and clear trend lines in trending stocks can be a primary strategy in trading the markets and making money. I appreciate you watching. Don't forget to like and subscribe, and wishing you much success. I'll see you in the next video.